Let's take a look and see what we've got going on so far in corn. We'll take a look at that, and we're down about between 2 3/4 and 4 1/4 cents anywhere across that list. Of July is down 2 3/4 cents up front, now 2.5 cents lower to 4.52 3/4. That's a penny off the low of a day, and we're working on about a 5 1/4 cent range. So we're a penny off the low of a 5 1/4 cent range. That kind of explains it all. Dees, the new crop, that's down 4 1/4 cents. 474.5, and that's just 2 ticks, a half cent off the low of the day there, and that's a 5.5 cent range. That's corn. Let's go to beans. What's happening there? Well, they're mixed. The fronts are up a tad, the backs are down a tad. July's up 1 3/4 cents to 12.15 3/4. We've had about a 10-cent range, and we're right smack dab in the middle of it. Let's go out to the Novi new crop. That's down 3 ticks or 3/4 cent. 11.96 is last. Struggling to put a 12 handle back on that Nov. That's beans. Let's move out to see what Chicago wheat's got for us. Wheat in Chicago's down double digits, 14 cents up front in that July contract to 6.78 3/4. A penny and a quarter off the low of about a 16-cent range. That'll give you an idea how we've trading there. That's weak, right? Dees, wheat in Chicago, that's down 13 3/4 cents to 722.5. And again, we're 2 ticks off the low there of a 14 3/4 cent range. That kind of sums it up, doesn't it? Let's go from Chicago wheat to Kansas City. That's the hard red. 13 1/4 cents lower there in that July contract to 706.5. That's 1 tick off the low of the day, and we've got a 14-cent range there. You go out to the Dees, that's 13 cents lower to 737 1/4. That's a half cent off the low of another 14-cent range. So there's the hard red, kind of the same vein as the Chicago wheat. Both Kansas City also suffering from the same ills. What about spring wheat in Minneapolis? That's down 4 cents to 748. That's about, 4.5 cents off the low of the day and about 4 1/4 cents off the high. So we're smack dab in the middle of that range. That's July. Dees is down 4 cents to 771 1/4. Moving right along, he says, to the cotton was down the last time we saw it. It's actually added to its losses now. 214 cents or points lowered in that July to 78.96, and we've got 171 points lower in the Dees to 76.39. That brings us to our next guest analyst. That's Mr. Ted Seifried, Zaner Ag Hedge. He's in Chicago. We've been led to believe it's a gorgeous day there, Ted. So that's a good thing. And I said, now you've only got 4 more days of summer left, so you just used one up today. What are your thoughts on the market?
Well, I don't think it's that we have 4 more days of summer. It's like we have 4 more days of like decent days in the 70s, and then it'll be the 90s for a while. But yeah, it's whatever. Markets. Okay. My focus is corn today. This is the 3rd day down here, Tuesday, Wednesday, now Thursday. And what a difference a week makes. We are testing the 50 and 100-day moving averages today. It would be really nice to see a close above them and sort of hold on to this trend line, this upward trend that we've been in since the middle of April, really since the end of February. But we're on high alert for breaking that trend. And again, these major moving averages are something to be watching very closely. The 50-day moving average is at 452 3/4. The 100-day is at 453.5. We've been below them at points, both of them today. We are currently below that 100-day moving average. We really don't want to see it close below that. But it's just kind of reflecting a shift in mentality, Scott. At the end of last week, we were worried about planting delays. We were worried about, not seeing enough progress on Tuesday afternoon's crop progress report. Well, we're above the 5-year average. Now, I am very quick to point out that, as are a lot of analysts, that 5-year average is skewed a little bit because of 2019 being way behind, and even 2022. But either way, the narrative's been that we're way behind. Well, okay, we're above the 5-year average. And now we're left with a drought monitor that looks like one of the best looking drought monitors we've seen in a while. There are not a whole lot of, alarming colors on that map of the Midwest. And so I think that mentality is shifting more towards, okay, the crop's going to get in. Maybe it's not going to be all the acres that it could have been. Maybe there will be some shifting to beans. Mm-hmm. But I feel like there were more acres out there than what the intentions were reporting. So I'd be surprised if we don't get close to 90 million acres of corn. Again, I think the market's feeling that and feeling like that drought monitor is setting us up for a really good start here.
I can't argue with any of that. And, like I said, I think, the one bullish card we had in our hand, if we were playing cards, was short covered by the funds. We played that card. Yep. Now, what cards do I have left in my hand for another bullish move? And if you take weather out of it, all I've got's a pair of threes. So, let's take a quick break, though.
Was that our weather rally for the year? Sorry to cut you.
Yeah, right, exactly. All right. Stay right there. Don't go away. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge in Chicago. We'll be right back after this. All right, welcome back. Let's talk about some livestock, right? You can't wear this jacket all day and not get that done. Let's take a look at live cattle. We've got that one preempted, or what else? What's the right word? Anyway, 72 cents lower in June. 182.62 is last there, and that's, only about what? 17 cents off the low of the day, and we've had just over a dollar range, so about $1.30, $1.25. So that's what's happening in June. So we've got that's probably little legit. 30 cents lower in October to 182.15 there. So live cattle just trending a little bit lower here. No buyers to really come in and step in and stop it. Just like feeder cattle here, quietly just going lower. 60 cents lower in August feeder cattle to 259.65. And again, only about 37 cents off of the low of the day there, and we've had about a $1.70 range. Go out to say the Nove, that's down 55 cents there to 261.70. So that's live cattle and feeder cattle. Let's see about the lean hogs. We'll get back to our guest analyst. June lean hogs higher by a nickel. 93.82 is last there, just 30 cents off the low of the day, but not too far off the high of the day either. We've only had about a 70-cent range, so we're smack dab in the middle of it there. August, that's down 35 cents to 95.55. Let's bring him back in. That's Ted Seifried. Ted, we got 60 seconds. What are your thoughts?
Starting with hogs, I'm glad to see we're off the lows there in the August, but the August contract got to the lowest point that it's been since mid-January. This has been a pretty epic slide off that double top high. We're very oversold, though, at about 25% on the relative strength index. So maybe, just maybe, we can try to find some footing in here. Aside from that, cattle seem to be looking for some cues from the cash market, both cash cattle trade and also how box beef prices progress after what was sort of the peak or one of the peak demand weekends of the year. But you don't like the big reversal down day that we had in feeder cattle, closing or new recent high, closing below the previous day's low. That's a bit of a warning sign on the chart. But the fact that we're not following through the downside today, I guess, is maybe a little bit of positivity. So again, just kind of waiting to see what happens here.
Yeah, I get the same feeling too. But yesterday was interesting. That was an interesting move with that JBS stuff. We talked about that earlier with the guys at ADM. All right, thanks for doing that, Ted. Great stuff as usual. Great content. Thanks for being on the show. I'll bring it back here to Nashville and hand it back over to Tammy.